again. Hey, welcome to Harrington Hon Sweatin Money. We may or may not have other or ownership or other positions of the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast. And always do your own homework and research before investing in stocks. I'm your host, Kong. Along with my co-host, Gibson. Yeah. So let's take a look at what's in the news. After making a statement on Tuesday, Federal Reserve Chairman Janet Yellen had to defend herself against Congress on Wednesday, where on the Democratic side, she was given a bunch of useless criticisms by the Democrats with questions that didn't directly relate to the economy, while on the other side, the Republicans came in with economic falsehoods about her plans. One of the major concerns they have is over the Federal Reserve's paying banks interest at a rate higher than its own benchmark federal funds rates. Now, Janet Yellen merely said that the rate differences were minuscule, but the thing is that's actually what it does. You can check out the Wall Street Journal's video entitled "How Interest Rates Are Set: The Fed's New Tools Explained." It's done to encourage the big banks to park its money while also lending money to other banks. So, the Federal Housing Finance Agency, or FHFA, on Wednesday released its Home Price Index report, and house prices jumped up 0.2%. The price increase apparently wasn't high enough to discourage existing home sales for May. Sales are actually higher than in April. Keep in mind, April's numbers were adjusted lower than previously calculated, but sales increasing by 1.8% in May from April means it increased by an annual rate of $5.53 million, the strongest pace of growth since February 2007.
Well, better buy the houses before the interest rates go up.
Yeah, and then, of course, the U.S. jobless claims report was released on Thursday, and claims are down, way down, to a 43-year low, only 259,000 claims, which means that for the past 3 months, jobless claims have remained below 300,000, which is a critical mark indicating a strong hiring market and is a sign of a healthy economy. But, of course, hold your horses. Thursday, the Chicago Fed's National Activity Index for May fell to negative 0.51, when most economists expected it to increase from April's numbers. The 3-month average compared to prior years are also slightly lower. Keep in mind, however, a negative 0.7 suggests a recession has begun, and we are far higher from that point. So, Bloomberg released its Consumer Comfort Index last week, and compared to the week prior's numbers of 42.1, it ended higher at 44.2. When asked whether or not the federal balance sheets should go through a stress test, Janet Yellen said that there was no such need, but they do it anyways because of public interest. What the congressman was afraid of was exposure to debt and the possibility of lost income or ending up with negative income. Now, what the worried congressman didn't know is that the possibility of a wind down in quantitative easing could not mean the feds would be in a negative income when the economy is doing well. So to understand the Federal Reserve's balance sheet, you basically have to look at the assets and liabilities, and basically we have more assets. To figure out the full details, you can head over to the Khan Academy video that explains the Federal Reserve balance sheet.
Yeah, I wonder how that's going to pan out. I mean, the federal government did absorb a lot of toxic assets, which, even though have value, is pretty much negative in value.
Right. Now, on Thursday, June 23rd, we all awaited results of the BrExit to come in after polls had closed at 10 p.m. GMT, and of the 382 voting zones, they should have clear count by Friday. Well, they did have a clear count by Friday. Now, in the days leading up to the vote, everyone was expecting votes that Britain would stay in the EU were going to be the majority, which was strangely in sharp contrast to the previous news we heard of that the possibility of leaving being pretty high, reversing prior days' trends of lowering stock prices and, in fact, sending stocks rising and rising. Now, even before the vote was happening, was about to happen, let alone... Oh, never mind. Yeah, but so people that were betting on the market that would go down at a certain point with a very short time frame, only to have the market price point rise, would have been priced out if their time frame and price range was very limited. then the results came in, and you have to wonder, where the hell did that news, quote unquote, of them staying come from? Like staying in the EU, where did that come from? Now, Britain had a 72% voter turnout, and the Brexit came through, and Britain will no longer be a part of the European Union in due time. So, and as we were about to get back to record highs in our stock markets, we dropped dramatically low. More on that later. However, the VIX jumped up 32% from the prior day's ending level to and is sitting right above 20. Well, as of Friday, was sitting right above 25 points. Now, 20 is a critical point where we enter extreme volatile times. As such, the British pound was pounded, dropping 11% at one point, while the Japanese yen and US dollar soared as investors were looking for safer assets to invest in. Gold, as always during times of insecurity, soared as high as 8.1%.
Nice.
Yeah. Should have bought gold.
Hindsight's 2020.
Yeah, well.
Should have bought the winning lotto numbers.
Yeah. The pound had dropped to all-time lows, and most media outlets are saying that we haven't seen something like this since the 1980s. But if you look at the entire range of the 1980s, the decade the pound took a major dive, we haven't reached its nadir point. Even then, this isn't the first time we've seen troughs this low either. During the dot-com bubble burst, they reached that point in 2002 and again in 2008. So, just keeping things in perspective. So, now Bloomberg ran a list of some of the major winners and losers. You can check out that article on their website, but I'm only going to concentrate on one man, David Cameron. After the polls, he announced he would step down effective in October, and rightly so, because he's going to have to face his entire political party and answer why he handed this over to the Brexit folks, when in reality, he didn't have to call for a referendum on whether or not to stay in the EU. He could have just went about making deals with the EU without concern. The problem is, after the referendum on Scottish independence, where the Scots ended up voting to stay in the United Kingdom, he got cocky and wanted to quell opposition within his own party, and he was expecting that they would once again vote in his way to stay within the European Union. Now he's paying for it. And the majority of Scotland, Northern Ireland, and Gibraltar and other outlying areas of the UK voted to stay in the EU as opposed to Britain, which means Scotland can go back to a second round of independence referendums to break away from the United Kingdom in an attempt to stay within the European Union. Whoops. Yeah. Now, keep in mind the turnout for the... Wait, I just went over that, didn't I? Yeah. Let's move on. So, considering the lower voter turnout, however, it's hard to say whether or not a second independence referendum will succeed. On top of that, depending on how Scotland intends to enter the European Union, they may not have the eligibility considering how high their debt to GDP ratio is. Now, to enter the EU the EU maintains that your debt must be below a certain level, and Scotland is far beyond that. So depending on the rules, they may or may not be able to enter if the debt issue is overlooked. Now, the Treaty of the European Union, also known as the Lisbon Treaty, their Article 48 requires it to have a party to they have to have a party to the European Union as a separate state, which it was not. So that rules that out. Now, there's Article 49 where they can submit an application, but it doesn't mean an immediate acceptance into the EU, even if they met their requirements to promote, and this is to promote things like human rights, equal treatment to minorities, and, equal sex, equal treatment between the sexes, as stipulated in Article 2. Now, they do have a chance under Article 50. Now, while Article 50 mainly governs how a country will leave the European Union, there are provisions for specific areas within an exiting area to actually remain in the European Union, while Scotland might be able to wiggle its way in. However, it isn't a certainty. And I mean, it's going to be a messy breakup regardless. So, the terms between the EU and the UK still have to be negotiated. So for instance, like the immigrants from both regions will mainly be affected by the migration policy. Any chance of accessing each other's markets will also mean renegotiating terms, and any ground the UK had gained in the past will be renegotiated, and they may not get the same terms that they had before the referendum. Completion of the breakup has a 2-year clock. So during this time frame, even if the UK representative, well, he already resigned. So, basically, in July the UK was gonna become the head of the EU, like, because unlike unlike other areas or other parliaments where you have to vote and you have a prime minister, the EU, they choose their heads based off of a roster, and it rotates between countries. So Britain was supposed to head it, but then now this happened. So, and plus the representative to the EU had announced his resignation. So, who knows what the hell's going to go on. But with the UK exiting, the EU is going to be missing about $7 billion a year, which is what they've been handing over to the EU every year, just to be a part of it. Now, while in theory things could stay the same without renegotiations, that seems unlikely. Also, when you take the PRC's One Belt, One Road initiative into account, the PRC was cozying up with Britain so that it could be another door to its European market access after they were met with some EU regulations, which had already put a damper on the European section of its Ober initiative. But you can check out our other episode on that. One of the things that Brexit supporters thought was that by being an independent nation, they could jockey for better trade terms on their own conditions with countries like India and China. Upon news of the Brexit going through, though, Chinese media was not amused, and whatever deals they were working on might not come to fruition now that the UK doesn't have access to the EU market. Now, honestly, if you look back at the UK's history with the EU, it hasn't been the smoothest, and not necessarily because it was their fault. France had tried to veto Britain from entering a common market with them, and in the past, when a common currency was discussed, Britain, depending on the decade, either wanted to join or stay away. So you can check out more of the World Economic Forum's website for a better summary of the history. There is one thing to note. After the Brexit vote, Google found a record number of people searching for two phrases. The top question was, of course, what will happen if we leave the EU? However, the second highest question was, what is the EU? Which makes you wonder whether or not the Brexit vote was actually an informed decision.
I don't know, but if it's only... I think it'd be surprising if people in UK didn't know what the EU was. I imagine maybe it's a reflection of other world people's ignorance of what the EU was then, if anything.
No, this was specifically...
within Britain?
Within Britain. They drew the IP.
Well, they don't seem that smart after all then. Always making fun of how dumb Americans are.
I mean, there were other articles that I didn't include in this episode, but basically when you break it down between age and income, basically most of the people that voted Brexit were of a lower income status, and most of the people were also much older. The younger generation tended to vote to stay within the EU because they wanted the freedom to basically get the hell out of Britain. So, regardless, let's move on to other news. Last week, we talked about a court order for Apple to stop selling the iPhone 6 and 6 Plus in China because of supposed patent infringements. You can check out last week's episode in our show notes. But if you look at Apple's shares, they've kind of lost their luster compared to their all-time high in July. Now, they're down 27%. Sales are weaker, especially in China, and this lawsuit doesn't help all that much. Now, the article did provide some suggestions to increase profits, but it doesn't seem all that feasible. For instance, they wanted Apple to make a low-cost product that runs against their brand of being high quality. They suggested better student discounts, but why bother when students will already pay the premium to buy their products? And then the last one didn't make any sense because they said that they should cut down on the number of releases of their phones. But the problem with that is that, these aren't e-readers, which, those can run on low power devices. You don't expect much of them. So then, you can release one every couple of years. Now, the thing with phones is that you do a lot with them, and an annual release schedule is to remind everyone, hey, we still exist, and these, we still support these products. So if you don't release something, someone else was going to come in with a faster, a device with faster specs, and they're going to try to undercut the market. So that's not going to help either.
It's also a reminder that your old phone is now completely useless. You
Pretty
just
much.
buy it and replace it.
Yeah.
There's no more functionality in it.
Now, in the meantime, though, India just gave Apple a 3-year break. One of their laws limits whether or not a company can sell products within its own country when they don't have 30% or more of their manufacturing base within the country, because Apple relies heavily, on Foxconn handling all of their manufacturing needs of Apple, which means by relying on the same supply chain without having to invest more money into a new manufacturing space, they're still now able to sell to India, which is going to work out in their favor, but it's only for 3 years, so we'll see how this goes. And in other news, so here's an interesting deal that I've heard. Elon Musk's Tesla will now buy out his other company, SolarCity. Previous buyout amounts were only at maybe 5.7 times the value of the company, while this is 12 times the valuation of the company and will be about $5.7 billion to cover valuation and debts. Shares of Tesla fell, and SolarCity shares rose by 16%. Tesla fell by 10%. Elon Musk, though he thought up of the plan to buy the company, says he won't be voting in on the matter, along with another investor who also has shares in both companies.
Interesting.
Yeah, I just thought it's
Taking money from one pocket and shoving to the other.
it sounds like it, but once again, there's another article I didn't have time to put in here, but it said that he's going to lose money with this deal. So it's not like he's trying to put money in his own pockets necessarily.
To my knowledge, I think both companies are losing money.
Yeah, they are.
Yeah.
So he's not exactly making any money off of this. So in those regards, you can't really, make that argument.
His SolarCity shares would have gone up in value by 60%, right?
Yeah, 16%, but it's still not enough to cover the overall loss in both companies.
Don't know.
The only thing I can think of is he's, really trying to consolidate everything related to power. Like, okay, you got electric cars, and then you got the home generation battery units, and then, you got the solar panels.
Then he's going to consolidate Tesla to SpaceX because, he's building the car of the future.
Probably.
Maybe
that's like another, decade down the road or something. Who knows?
Yeah, so that it explains why the lackluster performance of both companies is because he has a grander vision than anyone realizes.
Maybe, who knows?
Contradicts everything I know about life. You measure yourself based on your performance, you constantly lose money. In fact, I think there's another article where it's saying that Tesla's multi-billion-dollar spending isn't really a formula to success.
Huh.
There was another one, but it was just criticizing it. But I think it kind of is a criticism of most modern companies that are publicly traded nowadays. We're like, oh, you're bleeding money every single day. That's okay, because we have money to burn. Someday we'll turn a profit, and then it'll be worth money then.
Well, on other news, Lei Ka-sing accepted an interview with Bloomberg TV where he said his outlook on China's economy is actually positive. Now, keep in mind, this was right before the BrExit. Now, he cited that despite the debt issues, exports remain much higher than imports, and that the services industry is rising. And it's making some good money, he says. So he also quelled mainland Chinese media's criticisms of him as, quote unquote, not loving his country by pulling out his businesses from the mainland. Now, he didn't exactly say why he pulled out, but he did counter their point, saying that he was doing business in the country well before China had even opened up to foreign investment, and even before Deng Xiaoping came in power. So he's been in the country for a long time. Now, when asked about the ever-increasing... Oops. No, just gave it away. Okay, so now when asked about the ever-increasing income disparity in Hong Kong and how it should be solved, he said the government should actually raise taxes on the extreme high earners, individuals and companies, but had some caveats to that. One, he said that they shouldn't raise it too much, just 1 or 2% at most. Two, he said that he didn't believe in free lunches, implying that rather than giving this money directly to poor people, that the money should be invested towards education and health services. He then emphasized that a lot of the discontent the city is facing is also due to the lack of opportunity for the youth, although we didn't get a chance to hear his views on how the government could create opportunities for the youth.
Probably through investment.
Well, you don't remember what you were saying? Okay, so sorry for that disruption, but okay, so Lei Ka-shing said that rather than giving money directly to the people, that people should he should give the money towards other services that would help them. But then he said that the youth is facing a lot of lack of opportunities. So, but we didn't hear how the government could help out in this area.
Yeah, it makes sense. Like when you're in the low skill sector of employment, you oftentimes can be easily replaced. So one of the things you can do to reduce the ability of being replaced is just to be trained and become skilled. So giving them more opportunities to become trained and skilled makes a lot of sense to me. I mean, if not, then keep expanding a sector that society has kind of deemed useless or has been replaced. I mean, if we're going to go that front, then maybe we should create jobs in factories where we replace machines with people.
Yeah, but I mean, the factory jobs have all moved up to the mainland as already since the 80s. So you can't exactly bring a lot of manufacturing jobs back. Even the jobs that the Americans are like, oh yeah, we're bringing back American jobs. Like they're not anywhere near to close to the number that they used to be. So they're not the big. Manufacturing is no longer the major employer that it used to be. And I've been saying this is the same exact issue that America's facing right now and has been facing since the 90s. I mean, you talk about training people, yeah, but towards what sort of jobs? Like how are you
training them towards the jobs that they don't have right now?
They don't have right now, yeah. But I mean, right now, let's say with computers, for instance, that's a major employer, right? At least for America. Now, but then let's say if you're some old guy who's like 50 and you're only 10 years away from retirement, but then now you're like, okay, hey old man, I know you only use your tablet for talking with your kids on Facebook or whatever, but you should go out there and learn to program.
Well, obsolescence is kind of built into the formula of things. It's just quelling is very normal. It's just the question is we don't we ideally don't want that to happen, so we're going to try to do the best we can to avoid it. But when you get old, you can't be like a 90-year-old stunt car driver, right? I mean, that wouldn't make any sense.
Yeah, well, I mean, okay, so that's a case for with the old people, but then he's talking about youth specifically here, and especially in Hong Kong's case. I think some of the issues it lies in the fact that Hong Kong's economy itself is not as diverse as we like to think. I mean, ever since the manufacturing jobs moved up into the mainland, what has Hong Kong become? Well, before China had fully opened up, Hong Kong's status mainly relied on the fact that it was the major opened port. It was basically the west gateway into China, and that's what helped its economy rise. And now, that's no longer the case. So what do they have really? Ever since 97, they really don't have much. I mean, granted, they did transition into a major international financial system. Yeah, okay, great. But then so now you look at people in Hong Kong. What are people going towards, right? What they call E and L, and E is in economics, L is in law, business. That's pretty much it. There's not a whole lot of diversity.
Well, I think if people are often like, well, first off, the answer is like, well, how about just give the money to the poor? That wouldn't make any sense either. Like, because it's a question of, well, give a man a fish or teach him how to fish.
Right. Yeah.
So what I think his perspective is that, well, instead of competing locally, we should think globally, right? What can we offer the world?
Right.
And if our masses, just like Obama said, when we fail to educate, we fail to compete. What is he saying there? He's not saying within our own borders. Is that we need to offer, like in a business, you have to offer people value. In a way, it's no matter how much you get paid, it's just a reflection of society's value of your skill set and your worth.
Right. Yeah.
So he's saying that, we need to up the value that our population has to everyone, not just ourselves within our borders. And right now they're relatively worthless. That's why they're unemployable right now. So What if we train them, like instead of giving them money and handout, and basically those handouts don't help too much because once the money's gone, what the hell they're going to do?
But that's the thing I'm saying is that it's not just them. It's honestly, I'll say it, like Hong Kong in general, because their economy isn't diversified. Look at the way America is making money right now. Yes, they do have IT, a lot of computers and stuff, but it's mainly through computers. But like the thing that is driving America's economy is the fact that we have copyrighted ideas and we are protecting this copyright. Hong Kong, on the other hand, what sort of creativity do they have? Like as a whole in society, they don't have that sort of culture where it says, okay, hey, go out there, create something new. That's not the case anymore.
I kind of think the world's one giant pyramid scheme waiting to collapse in on itself that every now and then gets reset based on world wars. So on that front, I mean, I really don't know if any society has anything to offer anyone. I feel like, America's economy to a good amount is driven also by real estate. And what is real estate? Selling land. Can Hong Kong sell land? I don't think so. What happens when you have resources? You have that desire to kind of grow, but then you don't have the ability to grow at all. Well, who knows?
Well, it's not even just that. I mean, Hong Kong has, it's been given, their land laws are a vestige of what the Brits used, which was basically the government has all the land and people are only buying leases to build and develop on that piece of land, and that's
much like American property tax.
Yeah, but I mean, it's just so ridiculous. There's no such thing. There's really no such thing as private property. I mean, now compared to mainland China, which took that same policy and did the exact same thing, but took it to a whole new level, it's nowhere near as bad the way it's implemented, but still, there's no such thing as private property.
Yeah, but I think it's kind of, the world views. So when things are growing, when the economy is growing, we see that's normal. When the economy stops growing, we call it recession. When it stops growing for a long period of time, possibly reverse its direction, we call it depression. What if things just stayed the same, right? We frown on it. We think of it negatively. And the world's population is constantly growing. And then I just think the expectation of constant growth is kind of what's going on. I mean, we shouldn't view lack of growth as anything bad, but I think we do view it as something bad. And I think it's an issue. It's just that eventually we'll run into the limits and the limits of this planet itself.
Oh yeah, no, we are running into the limits. I mean, the right now, Hong Kong not yet. Well, no, they've been having a population issue. All of Asia right now is having a population issue. Even China, even though they say that they're still a developing nation, the parts that are advanced right now, they are still running into the same issue where they're going to be like Japan. They're going to have more old people than they do have young people. They're not going to have a robust immigration policy to get an influx of a new population to kind of to recharge their retirement system and have enough productive workers doing things to stimulate that economy. I mean, they're going to be screwed. And I mean, Hong Kong with its position in relations to mainland China, man, I say get out of the island if you can, but hey, whatever.
Well, it's a bay, I think. Well, actually, there's Hong Kong Island.
There's Hong Kong Island, yeah, and then you got Kowloon Bay. I mean, you got the peninsula and all that. Yeah,
I think it's going to be a little bit difficult, but perhaps they can specialize in being some sort of loophole, like port of sorts.
Well, I mean, that's the thing, because they've transitioned into a major financial sector. The whole thing with the Panama Papers, now people are using Hong Kong residency as a stepping stone towards hiding their money in other locations.
Exactly. See,
like
they have value.
Yeah, well, that's the only thing that they can add. Great, yay.
Yeah, well, I mean, when you don't have anything else of value, really, what is a service, right? What's a service-driven economy, anyways?
Well, I mean, like, it's like that the .tv address. Originally, it belonged to Tuvalu or something like that, but then like they needed the cash, so they sold that the whole entire domain.
To ICANN, sort it out. Yeah, they
Yeah.
auctioned it off. Well, that's interesting.
Yeah, but I mean, they still got other activities.
Yeah, I
going
remember
on.
like top-level domains used to be restricted to a country only. You can't
Right.
you can't like get it if you don't have residency in a country. Now they changed it completely. You can have anything. Before it's just .com. Now you can be a anything you want. Yeah.
Well, anyways, we've veered off to a different course, and we're only halfway through. So
All right,
let's move on. So now back to taxes. In 2012, because the White House and Congress were butting heads, Bush-era tax breaks expired. Now, fearing this, many rich investors sold their assets, and companies issued larger dividends and much sooner to avoid the coming tax hike, which all actually brought the Gini coefficient down a bit. Now, this is the measurement of how equal a society is, and the closer you are to zero, the more equal the society. During that period, the wealthy lost quite a bit actually, just to avoid taxes. However, the World Economic Forum also noted that the increasing taxes from here on forth may not actually be as effective as it was before, because the wealthy can simply invest more money to avoid paying taxes. Now, a Washington Post article revealed a comparison between California and Kansas tax policies. California noticing that they had a deficit tax the rich, while Kansas decided to reduce its taxes. Long story short, California is doing okay as a whole, but keep in mind, it's the major coastal cities that are carrying them along, while the inland areas are lagging behind. In Kansas, despite accounting for the reductions in revenue from taxes, they later faced the possibility of not being able to pay their bills. But rather than raising taxes on the rich only, they raised sales taxes, which mainly affect the poor. Both states' behaviors flies against the economists' notions that in the U.S. that higher taxes on the rich would be a job killer, and that tax reduction encourages job creation. Now, this seems to be a story for manufacturing sector throughout the developed world, but even now in China, robots are filling more and more of the jobs because of the increasing wages. Robot sales to China have been lowered to 12% in 2015. This is partially due to increasing domestic production of lower-end robots, but elsewhere, sales are still rising. But if you think robots will take your jobs and in the future, possibly your life, don't worry.
Huh.
They still have a couple issues before they figure out how to kill us. So we're safe for now.
Banana peels, people.
Exactly.
Banana prices are about to go way up.
Now, last week we mentioned that this past Monday would be the rollout date for Costco's switch from American Express to
Visa.
Yeah, to the Visa cards issued by Citibank. So as you had pointed out, not all the customers are happy, and you yourself included. I'm
relatively indifferent between the cards, really. But I mean, for me, one of the things I didn't like about the fact was that they didn't automatically mail me a card, right?
Right.
I had to reapply for another card or etc. And Costco promised me a seamless transition to a new card, and this is not seamless.
Well, so much for being indifferent there.
But good thing is, my Visa cards are now our cards are now accepted at Costco, and your cashback will still apply.
Yay.
I'm like, yay.
All right. So now there's no surprise here, but after oil prices fell more than half from their prior peak, just recovering from the half point not too long ago with a 10-year low for exports, added with the fact that lack of coordination with other non-OPEC oil-producing countries like Russia and Iran, OPEC collectively incurred a deficit, a first since 1998.
And we still pay a lot for gas.
Yeah, of course, after the BrExit, things skyrocketed. That and plus, California, off the Ventura Coast, there's a lot of oil spillage, so there's that as well.
I know, how interesting there. A lot of oil-related problems, like in Canada, the coast.
Well,
yeah.
Yeah, come on, let's move on. Now, McDonald's is looking to sell its Greater China operations, that is mainland China and Hong Kong and Macau. So they'll go from being corporate owned to franchised, but rather than small owners, it's going to be franchised to a giant corporation. So there are several bids in the works.
Yeah, not sure how to register that one.
Well, let's take a look at the week in review. Last week wasn't all that kind, and this week was looking okay until Friday came along when the votes were tallied and results of the Brexit finally came through. From the day prior, the Dow Jones fell 610 points, almost 3.4%. The S&P fell nearly 76 points, almost 3.6%, and the Nasdaq fell 202 points, which is roughly 4%. So they really got hammered. So let's take a look at the international markets. Australia initially dropped within the first 20 minutes before coming back up, and last I checked, is staying slightly above Friday's levels. My guess is with Australia's mines and the rising gold might have actually helped to keep things stable. Because if you look at New Zealand, you kind of see a similar pattern, but its dig back into the black isn't anywhere near as fast. And actually, it's still in the red, really. So, I mean, the rate of climb is, just not as fast. Now, the Nikkei is up 1% on Monday after having fell more than 7% on Friday, when their currency had risen against the dollar by 11%. The Kospi is pretty much following New Zealand and Australia's pattern of dropping steeply before rising back up. Now, they were in the black for a brief bit, but now they're back into the red, still trying to claw back up, last I checked at least. Shanghai, like last week, is again defying odds and is actually up. So, don't know what's up there. Now, keep in mind, while the European stock markets were dropping anywhere from 6 to 8%, China had fallen 1.3% on the day of the announcement. This is thanks to pegging their currency to the US dollar. They did let their currency slip a bit, but not by much. So, Taiwan stock market didn't drop like everyone else's. It just opened much lower, but like other markets is climbing back up, but still in the red. And Hong Kong, the last British colony in the Far East, saw its stocks open much lower as well, but their Hang Seng Index isn't climbing anywhere near the levels they were on Friday, making it the worst performing stock in this list. And let's take a look at the investor sentiment. It's measured every week, but overall, no, compared to the historical norms, no one's really confident.
Makes sense.
Yeah. So,
who can blame them?
All right, so let's take a look at the playbook. Now, once again, just a reminder, none of the following should be misconstrued as financial or investment advice. This is merely provided for documentation only. Basically, I'm down, man. I took a heavy freaking beating. Heavy beating.
Same here, but I think in the long run of things, if you're doing long-term investment, it's beneficial to hold your stock for a year or so.
Of course.
So for me, I don't know. I still believe in the direction. My father and I discussed the stocks today, and I still believe in the direction that Disney's going to go. Just because the United States market is saturated, the next best step would be to expand in a foreign country, and the next best candidate would be China.
Yeah, and like I had said last week, with all the other Disney resorts or theme parks, they've all been losing money or not making enough. And Shanghai Disney, everyone's betting that it's going to be a moneymaker. Now, Dunkin' Donuts taking a beating there. Stupid Brexit. PHG, this is not a long-term play here. Somewhat long, but I don't actually own stocks in PHG anymore. Not since I sold them off in December, but this play is it was a call, and originally people were thinking that their stock prices might go up to around $30 or like $40 or so, and that has not panned out in my favor. So,
well, on the bright side is that you can only lose the premium you paid into the option itself.
Yeah, that was
maximum on max.
Yeah. Oh well. So let's take a look at the week ahead. Monday, PMI Services Flash Report. Dallas Fed Manufacturing Survey is going to be out. Tuesday, you have the GDP numbers, corporate profit figures, consumer confidence, and the Richmond Fed Manufacturing Index will be released. Wednesday, you have the personal income and outlays. Janet Yellen will make a statement. Pending home sales index will be released. EIA Petroleum Status Report will also be released. And on Thursday, you have the jobless claims. You got the Chicago PMI, Bloomberg Consumer Confidence, EIA Natural Gas Report, and the St. Louis Fed Chairman will make a statement. Also, the federal balance sheet and the money supplies will be released. On Friday, you have the motor vehicle sales, PMI Manufacturing Index, Construction Spending Report, and the Cincinnati Fed Chairman will make her statement. So, let's take a look at the recommendations. My recommendation is this piece where the Marketplace, the radio program, they teamed up with the TV documentary series Frontline to talk about the income gap in America and the reasons behind it. This series talks about how the corporate culture was changed from being customer and employee centered to shareholder centered. Completely underlies why I'm investing, because you sort of have no choice but to invest. Otherwise, you're not going to make it, just purely based on hard work and, company raises alone. And I mean, like, for the past 30 years, what wages have, stagnated?
You carve your own path, really. It's kind of, yeah, you have to keep building up your own value and then keep seeking companies that are willing to compensate you accordingly and so on. But that's not an option for everyone.
Right. Now here's a bonus recommendation. The prior recommendation is very much an emotional decision from my fear of becoming poor again. Now, however, when it comes to investing, you need to take your own emotions out of it. And many people got Brexit wrong because they all wanted to believe that the United Kingdom would stay in the EU.
Because they should be scared to leave.
Yeah. And when you had people taking bets, gambling outside of the stock market, where the majority of people thought they would stay, people didn't do their due diligence and they didn't have a system in place to guard against the reality that happened. So,
secret to beating Vegas: don't bet. Well, in this case, they were fucked either way. Either way, so.
Well, that's it for our episode. Thank you for listening.